Ever wondered what a truly resilient investment portfolio looks like? One that's built not just for today's market, but for the next decade and beyond? Well, I've been getting a lot of questions about how I structure my own investments for long-term growth. So today, I'm pulling back the curtain. We're going to dive deep into my personal asset allocation, look at some of the specific holdings I believe in, and break down the philosophy that ties it all together. This isn't just about picking stocks. It's about building a financial fortress. So, if you're ready to see how I'm navigating the complexities of the market, let's get into it. The cornerstone of my investment strategy is a carefully balanced asset allocation, designed to capture growth while managing risk. It's a classic approach, but one that has stood the test of time for a reason. As you can see from this breakdown, my portfolio is structured with 60% allocated to stocks, which are the primary engine for long-term capital appreciation. This portion is diversified across various sectors and geographies, including both established blue-chip companies and high-growth technology firms. The goal here is to harness the power of the global economy's expansion over the long haul. Complementing the equity portion, 30% of my portfolio is dedicated to bonds. This is my stability anchor. In times of market volatility, high-quality government and corporate bonds tend to hold their value or even appreciate, providing a crucial cushion against stock market downturns. This fixed income allocation generates a predictable stream of income and significantly lowers the overall volatility of the portfolio, allowing me to sleep well at night, even when the markets are turbulent. Finally, the remaining 10% is invested in alternatives. This includes assets like real estate investment trusts, REITs, and a small allocation to commodities. These assets have a low correlation to both stocks and bonds, adding another layer of diversification and offering a potential hedge against inflation. Now let's zoom in on a few key holdings that I believe are essential to my strategy. First up is the Vanguard S&P 500 ETF, VOO. This isn't a flashy pick, but it's the bedrock of my equity allocation. By holding VOO, I gain instant diversification across 500 of the largest US companies. It's a low-cost, efficient way to bet on the long-term success of American innovation and enterprise. It's a set-it-and-forget-it holding that compounds wealth steadily over time. Another significant holding is Microsoft, MSFT. This is more than just a tech stock. It's a strategic position in the future of business itself. With its dominance in cloud computing through Azure, its ubiquitous Office suite, and its growing presence in AI, Microsoft has multiple powerful revenue streams. Its strong balance sheet and commitment to returning capital to shareholders make it a resilient company that I am confident will continue to lead and innovate for years to come. Lastly, I hold the iShares Core US Aggregate Bond ETF, AGG. This fund provides broad exposure to the US investment-grade bond market. It serves as the core of my fixed income strategy, offering stability and income to balance the more volatile equity side of the portfolio. So what's the big picture? My investment philosophy is simple: play the long game. It's not about timing the market or chasing the latest hot trend. It's about discipline, diversification, and patience. By combining broad market exposure through ETFs with strategic positions in high-quality, dominant companies, the goal is to build wealth steadily and sustainably. This portfolio is designed to weather economic storms and compound returns over a multi-decade horizon, ultimately providing the financial security needed to achieve long-term goals. It's a marathon, not a sprint. And this structure gives me the confidence to stay the course. And that's a wrap. I hope this deep dive into my portfolio was helpful. Remember, this is just my personal strategy, so always do your own research. If you found this useful, don't forget to like and subscribe for more content. Until next time.